everyone. You're welcome to Conversations. And on Conversations today, we have something really special. This is going to be like a training and very informative. With me, I have two of my guests. One of them is a commando and a fellow C88 set member. So I'm going to allow them introduce themselves. So I'm going to start with you, Rashmo. Please introduce yourself to us and what you do.
Okay, my name is Abdul Rashid Momo, Commando 88 Sets. I'm currently a stockbroker and I trade for TRW Stockbrokers Limited. I'm the lead trader and analyst. Thank you.
Thank you, Rashmo. Thank you for coming on the program. And thank you for this particular one is powered by you. So I'm going to, yes, so Ambrose, please.
Yeah, my name is Ambrose. My name is Ambrose Omodio, the CRO of Invest Data, the means Chief Officer of Invest Data. I went to research education on equity investment, purely on education on how to take advantage of the market, either in a bull or in a bear market, because market has two cycles. We'll teach you how you can take advantage of the cycle in the market. That means as an investor or trader, all you don't need is information and what education. Once you get these two right, at any market cycle, you are making money. Just as Rashid have said, you can trade online through them, but we are not a stockbroking firm. We're just only a research firm, and for us to educate Nigerians and the global world how to invest effectively and profitably on equity market. Thank you very much.
Thank you. Thank you for your time. So today we're going to be learning a lot from these two men. I mean, I'm close to being an illiterate. When I'm so glad to have both of you. So let's just take it up from you, Ambrose. You can start.
Yeah.
We are assuming we are all what do you call them? We know nothing about this.
Novice investor.
Yes.
Novice investor. No worry. That's what I prepared for.
Investor.
That's what I prepared for. No problem. From the scratch, you can. No problem. That is good. Yes, we are looking at the transforming Nigeria Stock Exchange of today, and the subtopic there is understanding the dynamics of the stock market. That means you need to know the rudiment of stock market, how it works. You know, stock market is a place that if you are looking for long-term investment, find short-term investment. But as we go along, I will be explaining those details to you. And then when you say stock market, we're looking at stock market is not on isolation from the economy. You can't mention stock market without mentioning the economy. That means you must know what is happening in the economy to also invest profitably in equity market or in the stock market of any client, especially in Nigeria as a case study. The dynamics of stock market contains changes in the market structure, regulatory, and the behavior of market forces. Market forces, I mean, bid and offer, demand and supply. In our economies, we know the power of demand and supply. So it is also in equity investment. When you see, demand, people buying a stock, price is likely to go up. But when people are selling, price are likely to go down. That's why you need to understand the rudiment when it comes to market structure, comes to regulatory and behavior of the market. And that behavior is what part of analysis we're going to discuss here, which is the analytical analysis, we're talking of technical analysis, but I'm not going to go detail into it, but I want to mention them when I'm teaching generally. Then if you understand this bid and offer and the demand and supply, you are also in the market already, because in a school, where we're secondary school, when there's too much supply of a product, the price will come down. When it's a high demand for a product, the price will likely to. That is how it works in the equity market also. This behavioral aspect of stock market determines the general market direction, price movement of individual stock or any other thing on the exchange. Changes in the market today that help investing public to make informed investment decisions, and generate good returns as follow. Today, our market has become one of the transformed international market that both foreign investors, local can play from anywhere in the world. This transformation was made possible by technology, and also make our market become more transparent. That means anywhere you are in the world, you can play Nigeria stock market. So far, you have account with any stockbroking firm that has online platform. You don't need to be calling your broker to buy and sell, because technology has made things easier. And that is why you can see that we have a foreign direct investment in the Nigerian economy and portfolio investors in the Nigerian economy. But as we speak now, because of the structuring and the COVID-19 effect, foreign investors in Nigeria are not much. Then the local investors through the PFAs, the institutional investors, are taking over the market to a level which is also good for our market. But I believe that when foreign investors come back in terms of portfolio investors, that will make the market more active. These are the things that are called that transform our markets today. The second one is the real-time information portal today. Before now, you wait for weeks to get information on Nigeria Stock Exchange. But with the reporter we have now, as things happen on the exchange today, pin fall on the exchange, you, even though you are in the bush in your farm, you have access to the information immediately. It also help you to take, quick decision on your investment. You are not waiting for somebody to interpret it for you, or someone to send it for you, unless you are not in the market. That's why I tell my followers anytime, anywhere, that if you are an investor in the market, try and be close to the market. Try and know what is happening in the market, so that you won't be left behind. You will be calling after market has taken action. No, unless your money is not there. Like I tell you that where your money is, that is where your mind should be. If your money is in the market, you must be sure that you get information on real time. And that is why the exchange to me today is one of the best market that you can get information right. It's dropping now that results are coming to the exchange. You don't need to call anybody because they submit the result from their office. As they submit the office, you see it first before the broker. You analyze and take your action, immediately. For that, for me, it's a good thing for Nigeria stock market, and that also attracts more investors to our market. For me, investors should take advantage of that because information is key anywhere in the world. The third one, that the market has been open to the world. When I mean to the world, you can trade online, as I mentioned, from any platform that has access to Nigeria Stock Exchange, especially the stockbrokers. And I call it do-it-yourself opportunity to investor. You don't need to wait anybody. You can do it from your phone, from your laptop, anywhere you are. And that made the market, for me, more transparent. You are not waiting to see who will interpret for you, unless you are not ready to learn. And that is why this forum today is, for me, it's a welcome development for people that have interest in the market to know more how to do the market, or even to start coming back to the market if you are outside the market before. Because I know people that lost money in 2008, 2009, they are still losing their wound. But they need to come back to the market where they lost money to make money. I know people that if an adult is running, and I thought fall, I don't have to look at what for him. Is it there's a hole there or there's a pit there? You now know. But when a child is running, a child will fall and continue to run. But if you are lost money in the market, you need to go back and say, have I, my strategy, is it right? Or have I followed bad wagon? This same market have lost money. People have made money in this market again because they changed their strategy. That's why I like this forum, so that you can know what to do after the training. You can sit down and look at your portfolio and know what to do next. That is for that. The next one there is the definition of Nigeria Stock Exchange, how to release what the compliance and post requirements among quoted companies. For me, since the last 5 to 8 years, the compliance on the exchange has improved, both for the stockbrokers and for the listed companies. Now, every company has regular time to release their results. If you know that, you can equally invest with that date alone. That's why I call it mastering any season. This any season that companies have to release their numbers. At that season, you see volume of funds coming to the market. You see a lot of activities coming to the market because we want to take the result, what our company has done, because that's where invested money. Like I tell you that after a child has stayed in school for 3 months, they bring out a report card, how you have performed. So all these quoted companies, at the end of every quarter, they bring out a report card to show what they have done. You as an investor now assess your company, whether they've done well, whether you should hold your portfolio there or your investment in that company. But keeping to this regulation, or keeping to this, what makes it very active and very good for investors. You can plan effectively. You know that your company will release results every end of every 3 months. And the date release, you look at it and master it, that day you should be in the store before the results come to the market. Once you don't do that, I'm telling you, you take advantage of price rally. Just like now, company are raising results. Prices are not rallying because fund is starting for where a safer investment window. Before now, 2020, market was up by just about 50.3%. But now, at the end of January, market rally with almost 5.32. But now market is pulling back. Like Rashid just said earlier when we traded that market will always correct. This pullback is an advantage for you to buy low, especially in this earnings season. You don't need to panic because market is pulling back or correcting. It's part and parcel of market anywhere in the world. When the market,
if I may come in. So what you are telling me now is that as at now, we are able to actually, you don't really need a stockbroker because you can do most of the things online.
Yeah.
And you have to be watchful.
Yes,
that means you have to watch the market.
Yes.
Yourself,
yes,
right?
Yes.
And one other point you have raised is the fact that those that lost money, You know, the fact that you lose money at a time does not mean you should not, get into the market again.
Yeah. You already don't know that you need to change your strategy. Like I said earlier,
change your strategy.
Yes.
So Rashid, if you can come in there, how do we change our strategy? Because that statement.
Basically what happened during that period of meltdown was every I won't use the word, every Tom, Dick, and Harry was failing in the stock market then. Everybody was dragged into the stock market. Even, I remember then, even public offers were sold on the streets of Lagos then, and everybody looked at the stock market like a short-term money spinning instrument. Because prices were going up every day and people saw it as an avenue to make good money. And a lot of people entered. And not only that, the banks came out and borrowed monies and everybody got their fingers burnt at the end of the day. Most people got their fingers burnt at the end of the day. It was more like we could hear the name of the stock market anywhere, bus stops, churches, everybody was talking about the stock market.
A woman was selling it. Even the
different offers.
Mechanic was
even some companies, they were under lock and key where prices were going up. There was so much money pursuing two little things. People were creating something, nothing. It was crazy then. It was crazy, and definitely people made money. Definitely people lost money, and
yes, yeah.
And if you actually check, most of the stocks that have been tested then. The big names, they've actually recovered from that period to date.
Yes, I agree.
It's just like some companies came in and they didn't recover. Like most of them were the insurance sectors, the banking, a lot of sectors actually. Those are the names we've always known. They actually recovered. People just said buying any stock, any name, any stock that was dead, they brought it up. So it caused so much problem then, and so now that I'm saying change your strategy, I always tell people one thing, that always look for stocks that are tested. Ask yourself one question: Why are you having a GT Bank account? Why are you having a First Bank account? Because you trust them. That's why you open an account with them. So you actually look into those stocks. I mean, that kind of company, and you invest in them because you believe in them. So that is how I do my own kind of investment for long-term players. The first thing I ask that,
just to what you just said now.
What product do you use?
Exactly. Yeah.
You understand? What taste do you use? What beverage do you drink? There must be something why you are buying that. So those are the basic things you learn first. It's not don't let me derail. There was something that happened in the market lately. A name came up, Japan Gold. From 20 kobo, that stock got to about 1 naira
69 kobo.
69 kobo.
Yes.
Correct. People made so much money. If I bought that kind of stock, I'll be relaxing now in the Bahamas or something. But I don't follow that kind of trend because I know that when the bubble bursts,
it's not sustainable. Yeah.
That is what I got. Nothing. So and that's what's happening
fundamental.
Now. Yeah. So now that we're having issues now, the market is doing correction. We know some companies have actually declared dividends and we know what they're going to pay. The one that has moved up now that things are down, there's no support because there was no basis of it moving up in the first place. But those kind of stocks that can make you good money, and they can get you can get your fingers burnt. So even if the current ones now, the price are dropping, that at the end of the tunnel, they are paying you something. So it's a give and take. So that's what I say.
Okay. Just to continue, because we have a lot to say because of time. Yeah, the next point there, look at the keeping to regulatory filing date. And I will tell you that most companies on the exchange has complied to that at the end of every quarter, they have 30 days to release their number. Before it was 45 days, then they are reduced to 30 days for quarterly. Why for full year, 90 days? And you can see that companies are keeping to it. That's why we're seeing numbers already on the exchange for the full year result after they release their unaudited in January. full year audited are coming out to know companies that are capable to pay you dividend or not. On that note, that is another thing that has turned our market to be one of the market that should be attractive to anybody in the world, because anytime you need information, it's available both on the company listed and on the transaction between the people trading on the exchange, which is the secondary market. Knowing the position of the foreign investor through the foreign investor portfolio, we call it a foreign portfolio investment chart flow, is very important. Report that comes to the market every month. You can know what the foreign investors are holding or what they are not holding. As I told you, as at middle of last year, when the PFAs took over the market, they dominated the foreign investor. Now they have the highest jump from the market until you see another report again at the end of this February coming up anywhere from the second week of March to know what they are holding again. That should tell you where the fund is entering. Now that CBN has adjusted treasury bill, you can see that funds are leaving equity market because fund is looking for where it can get a better return with safety. People that came to the market when it was rallying, most of them are not risk takers. But now they see opportunity that their market is recovering, they are running back to where they came from because they don't have that risk appetite. But for people like Rashid and myself, our market is our market. We can't run to equity because we run to treasury. Equity is where we can take advantage of trading and also investing for long term. And also, I will tell you in this forum that you need to have two portfolios. Have your long-term portfolio and your short-term portfolio, which is your trading portfolio. Long-term can be buying company that has good fundamentals, that are growth stock, that you want to grow with time. Fine, that one's your long-term portfolio. Like what you said, you can buy stock like Japo at 20 kobo and sell at 1 naira. Short-term, if you are not waiting for long-term, you make your money and go. Because there's no fundamental. But company that has fundamental, that has the business model behind the number, you can buy them and go for a long term. But when there's no model behind the number they are releasing, you have to be very careful. That's why you have to have your trading portfolio and long-term portfolio for investor. Then understanding the market dynamics, I said, the structure is very important and critical to profitable investing and trading, because I said market is in cycle, bearish and bullish. But in that bearish and the market has another phases. We call it accumulation phase, markup state, distribution state, and decline state. This state, any market cycle you see yourself, you want to apply this same state. You know that market, is it at the accumulation stage, is it at the markup stage, or distribution, or decline? If you know all this as an investor or trader, it's your guide to know what to do at any time. Equity investment is always informative driven anywhere in the world. If you have information, market feed on what? On information. This information that descriptive information or analytical information, both of them are good and they work together for the rest of the investor to know what to do at the right time. When I mean descriptive looks at what the past, the data, while analytical look at what the current and project the future and make recommendation. And that's why I said economic trend or event is very important. Apart from politics, policy and social trend, you must know which circle is the economy, because economy has 5 circles. We have what we call early expansion, middle expansion, and late expansion. We have early contraction and late contraction. This will guide you to know the kind of sector you should look at. When a company is economy is in early contraction, things are started getting bad. When it's late expansion, things are worse. Like when we were in recession last year, you know that the economy was bad. That's a contraction for us. But now we have moved into early expansion because we have moved away from a negative trend of GDP to a positive as at the end of fourth quarter 2020, having a 0.11. It tells you that we are now moving to early expansion. This early expansion tells you that there are some sectors that will benefit from this expansion, which are those sectors, the food and beverages, because things are going to improve. The banking sector, because CBN have increased the treasury bill, because banks suffered a lot of setback last year because of COVID-19 and low interest rates. The banks income interest was low because they were not making money for their normal TP again. Banks play because they have the money to play. But now that CBN is making up, these are the sector that will lead this early expansion. The travel sector, which are the airline, because of the COVID-19 drugs discovery. That's what's going to impact that sector. Activity will come back to that sector. The hotel business will come up again. These are the things we'll be looking at this early expansion. That will guide you where to put your money at this expansion. You understand? This I said, the early expansion of economy, mid expansion and late expansion, then early contraction and late contraction. If you have this at your mind, you now look at the market phases. I said accumulation phase. Accumulation phase is where prices has gone to a level that it has to be at the support level. At that point, you start buying, accumulating what? Company that has value, because when market starts that has value, it start going up. Demand will be high. Like I said, when there's demand for a particular thing, price will start going up, and that will have to accumulate at the accumulate level. When prices are high, it enters a markup price. that price that people are seeing, more people are seeing that stock, and they jump into the market, price will start going up on that rate. For me, you need to understand this cycle. That will also help investors to know what to do per time. You look at also the industry and the company in particular. You need to know the industry, what is policy favoring that industry, that sector. Like we just said, mentioned bank because of later adjustment. You look at sectors that have government policy. When government will do intervention for the COVID-19, there are some critical sectors they invested money, they bail out. The agricultural sector, the healthcare. These are sectors you need to know the industry, what is happening there. The individual company in that sector, how are they benefiting from this government intervention? Is it depending on their number? You know, that will also guide you what to do as a effect. Don't just because market is wide, let me just jump in. Something should guide you what to do per hour, per second in anything you are doing in the equity market. Information about alternative investment window. I told you that before now, the fixed income market were having a low yield. That moved funds to equity market. Assets in equity market was appreciating because of what funds were chasing those stocks. But now that there is a little improvement in a yield market, you can see that market is also dragging feet. You need to understand information about what alternative investment window. That also guide you. Price is very important because it tells you about a lot about the company. But you say Nestle selling for 150, you know what it is. Selling for 1,500, you know what it is immediately. But you say stop selling for 20 kobo, you don't need to go for any analysis. Oh, this kobo is selling for 20 kobo, something is wrong. One that's selling for 1,200, you know that means there's value. No, price alone can tell you information about the company. You don't need to even do more than say, oh, this price is selling for 50 naira, the one selling for 50 kobo. She tell you, send a message for you. Now do your research whether why is it selling for 50 kobo? Oh, it has potential to go up. Why is selling for 15 naira? Oh, I have to go further up or not to come down, no potential to support it. That's why price will also give you direction for this company. It's at this level or at this level. Price also is very important. Factors that will influence equity prices are many. I want to mention some here. The general economy will influence price, market activity in terms of liquidity and company fundamental, the sector, the industry, and the company itself. I said market has about 50% influence on equity price, while sector has about 30% influence on equity price, and company has just only 20% because company just raise the number, have about 20% of it. That's why when companies raise the number, there's no liquidity in the market, price is not going up because companies have performed well, no liquidity in the market. That's why price is not. But company have done well to release about 20% of what they have done. But because it's not up to 80% to influence prices, that means price cannot go up. For liquidity to buy that stocks are not there. That's why as an investor, no factor that influence market. It's like liquidity and what? And the market direction, economic direction, they are very, very important. Liquidity is really key, and sentiment. Sentiment to me is very, very important. That's why the market was down in 2020 because there was positive sentiment for oil recovery, and people were saying that funds were playing the market rally in the bad economic situation. For me, sentiment is key. We have to also look at sentiment about how people are looking at the market. Market timing is very, very important. Very, very important. I need to know market timing, when to be in the market and when to be out of the market. Many investors, they buy stock and hold, they don't know when to sell. And that's the major problem many of them are having. We know when to buy, don't know when to sell. Timing is key in equity investment because I told you that market is a cycle. This is a cycle. Follow that cycle to know the right time to be in stock and the right time to exit in stock. If you are accumulating, mark up, you sell. Distribution market is coming down. Distribution is already down. You know how to adjust your goal. Don't stop because stock are not wife. Say I've married my wife, let me hold it. Stock are not wife. They are done to make money and leave them there. For me, let's not just say because it's First Bank, you're not going to laminate it and put it in your house. I have First Bank. Doesn't make sense. It won't bring you money. Or is the Nestle. I have the Nestle since 50 years. Nestle, I have it. That does not mean until you convert that into money, that's where you make meaning of it. That's why I said, timing is key in the market because this part of the world, especially in Nigeria, for what I studied, many of us know when to buy, don't know when to sell. And that's why when market take you up, that's the market to drop you on the ground. But the smart one like Rashid, I know he's not in the market now because I know he has cleaned his mouth and out of the market now. He knows when to sell because he's a technician. But people that are there greedy are the ones complaining. And I know, yes. They have to also have knowledge of the market cycle. As I said, it's very, very important. Know when market is bearish or what or bullish. This also influences everything that concerns the market. How are some traders or investors able to make money consistently? It's about just knowing what to do at the right time. There's no magic on it. You can make money consistently in the market, know when to be in the market and when to go out of the market and come back again. You must not say because I'm in the market, it go up, I hold it, go down. No. When you make money, you sell because market is not a straight graph. It goes up and down. And it's actually call it a trendy market. When it go up, you sell. When it comes down, you buy. That's why people can trade in and out of the market. That means we're not staying for a whole year. When it's opportunity you enter, when you sell, you go to another opportunity. That is how to invest in equity market. For me, you can make money consistently in the market if you understand the strategy to play the market. And then the market cycle, as I've said earlier, is very, very important. These are the phases of the market as we speak. But these 4 phases that I've mentioned, we need to know what entails so that you can know what to do at each stage. The acquisition stage, prices of the equities are very, very low at a decline stage, where they're almost at support level. You now start this level, they can't go lower, no down here. This is a support level. You now start buying it. That will call it a buyer's market at that particular time. Buyers are in control of the market because it's an accumulation stage. But a markup stage is where people are saying that this stock is trying to trend up. People are coming in. You that have entered earlier at the acquisition stage, you'll be smiling because they are coming, price is going up. You'll be just nodding your head in your house. Okay, let them be coming more. As they are coming, thing is going up. But don't be carried away with the price that's going up. Look at the distribution stage, sell off immediately. Then that's the market will come to find what we call resistant level at that distribution stage. That resistant level, you need to exit and come out from the stock. Then before you enter a complete decline. That means you should know this cycle again as a trader or investor. Don't just say I bought a stock, I want to hold it. At the distribution stage, I'm there. I'm declared I'm there. That means you are working for the market. Just you bought, you wait, the market carry up that. No, know when to enter and when to exit is very, very key. At the stage is what we call resistance stage. Then the market have lost gas. That time market has no power to go up again, try to struggle. You should know that this market has moved from there. Yeah, it's struggle. No, let me start exiting. After struggling, next thing the market will pull back. That is where you enter a decline stage. You need to understand this level. At that time, you would have exited the market. Don't wait for market to decline in your head or at your hand. At the distribution stage, that the gas has finished. Sell at that point, I know that gas has finished. Even at the markup, you have made your target. That is why, as an investor, have your investment go from the beginning. The day you put your money down to invest, set a goal for yourself. The entry strategy and the exit strategy. Don't be carried away by the market. I'm going to make 20%, or so that 20% exit. Even if others are making 100%, it doesn't concern you. You have made your target as an investor or a trader. Don't be carried away what others are making. Because the day money that you have made that, oh, I want to make 20% on my 100 million, on my 10 million, on my 20,000 naira, you have set a goal for it. That goal is very, very important in equity investment so that you'll be told front and back by the market. But market has the way of carrying up and bringing you down. But that, don't be carried away with the trend of the market. Set a goal for yourself. That will go a long way to help you. At the decline stage, I told you, prices are going down. Prices are looking down. There's no gas in the market. Everybody wants to find out. Just like if you're a party and a party door finish, to go out from that door, people will be struggling. That is when the market at the decline, people want to sell, nobody is buying. That is, you need to sell when people are still buying. At the decline stage, everybody want to leave the market, but nobody is speaking because a lot of people want to come out of the party because the party is over. Everybody want to, and the door will be because everybody want to go home. Nobody want to pass that door because that is when you enter. When you are entering, you're happy. When you are entering, everybody. But when the party goes off, you want to go at the time. The door will be blocked because all of you want to go out at the time. That is why don't wait for market to get you at the decline stage. Exit at the distribution stage early before the market carry you down. Yeah, this is a picture of the bull market, the markup. At this stage here, if you can get it, at this stage here is the markup stage, the accumulation stage. Here is the markup stage. You can see the bull looking up here. Here is the distribution where there is a decline. The bear taking charge of the market. You can see at this chart here. Then I've shown you how to identify the phase early at the top. Just the summary. You should know what you are doing in the market. Don't just be carried away in the market. That's what they identifying the phases. A trader has different way of identifying the phases. Investors have different way of identifying phases. You must know the least resistant level before you can jump into any stock. You also know the markup stage. If you know all this upside, the breakouts of any trend, that will go a long way to guide you. These are how to invest in any market. And before I round up, know that if you are riding a market volatility, build your tent with what? With billionaires, investors. Look at stock the billionaires are investing is key. Any market you are, look at where the big boys are investing. Because those big boys are want to move the price up in that particular company. For that, go with them. Don't just say, for example, you know Dangote is a billionaire. The stock that Dangote is, go there and stay. Even though you are buying two units, buy it. But the man will want his name to be one of the richest men in Africa, and that stock will go up. Because that's what you need to calculate his worth. You want that stock to go up to the next level so that the worth of his value will also increase. If you're in that kind of stock, as he moving up with his money, you're also making money smiling because the billionaires are there. You need to identify the stock that billionaires are in. The company that has solid fundamental, solid companies with a trend pattern. There's a market that goes up and comes down. Any company that stays flat is not a tradable stock. But stock that go up and down is a tool that you can trend, you can trade, because when it comes down, you buy, it go up, you sell. We call it a trendy stock, trading pattern. These are the things you can look at to trade effectively in the market. Something that you're expecting their earnings to be better, that will support the price. Look at this company on the long run, on the short run. Earnings is very important. It supports equity price at any market situation, whether bearish or bullish. Earnings is very, very important. Then stock that you can look at if you are a long-term investor. I just mentioned for them: Access, Zenith Bank, UBA, GTP, UCAP, Transcorp, Dangote Sugar, Julius Berger, Total, and PZ. Depend on your investment goal. This is just a guide for you. But I know that as an investor, you want to look at stock that has potential to pay you dividend at the end of the year. That means you have to look for company that has dividend policy or paying dividend twice. And most of the banks in Nigeria pay dividend twice. You can plan with it as a retiree. That's why you have to have those banking stuff. At the end of every 6 months, they pay you interim. At the end of the year, they pay you full year. That means as a retiree, you can earn 2 times in a year. That's why you need to look for such stock to guide you when you are taking your investment decision. Thank you very much, and God bless you.
Wow, thank you so much. Thank you for this presentation, because this has really opened my own eyes, really.
Thank you very much.
People in my group that
ordinary, it was a crash program.
Yes,
so really try to bring everything under, a certain time frame.
Yeah.
Well done, my brother. Thank you very much.
So much.
Thank you.
Probably have, because I'm sure there'll be more questions that will come from this.
No, we're ready to answer the question. Very, very ready. Yeah, Rashid know that. Let the question come. We'll provide answer for this. No problem. No problem.
Okay, you said something about knowing where to buy your shares. You know, you have to look at those that are in, those that have shares in that particular company. Or
yes, where the billionaires are.
Where the billionaires are.
Yeah.
So how do you, well, this may sound a bit funny, but how do you identify where Dangote is, or, you know?
You know, today in Nigeria, when you mention Dangote Cement, Dangote Sugar, you know that it has a holding there. And if you want to kind of value any investor in the world, it is their holding that used to tight what they have and to value them. Because they have major shares in those companies, they want to pay good dividends, that they will earn more. The price will go up, it's their own value. For that, they will not allow those stocks to go down. That is the secret. Because when the stock goes down, it's going to affect their rating.
Okay.
Let me come in. The truth is that since the market crashed in 2008, right?
Yes.
Since 2008 till date, some companies have been paying higher dividends.
Yeah.
And it's just their lifestyle. Like then, as you said, the Dangotes, Elumelu, Otedola, Zimovia, you understand? They've been paying themselves because they have large chunk of those companies.
Yeah.
So since the market crashed till date, dividends have not gone lower. It's been going higher. The reason that must have gone low, that actually spikes is the share price of the stock. But in terms of payment every year, it's been going up. So they are still maintaining their lifestyle. Very expensive lifestyle. So basically, anybody, like from what Ambrose said, it's not everybody that does in and out like us. Like some people that they just want to buy stock and hold for long term. Then you, as we always say, follow the smart money. Just follow those guys. Don't look at the share price. Look at what you'll be getting at the end of every year.
Yeah.
And that's it. But for us, it's sell low, buy low,
sell high. Sell high. Yes, so.
Yes.
Yeah.
Everyone that can play that game. If people bought those names then, even when the market crashed, a lot of those stocks are recovered, and everything. So
what would be your final advice to someone right now? Maybe someone that wants to go into investing, right now. What would you say to that person? Somebody comes to you right now and says, I want to invest.
The first question I'll ask the person is, what is your investment objective? If you tell me, I will tell you what to do. Fine. If you tell me you're a retiree, I will tell you stocks to buy. This is the time to buy because dividend is around the corner. Buy those stocks. Even when the price comes down, you go to a dividend income, you are waiting for the dividend. You can now wait because that is why you have a goal already that I'm a long-term investor. But if you're a trader, I will say hold your cash, let the market come to a level. I will say that this is a support level, you jump in. But traders also at the same time have two portfolios. Like I tell you, they do long-term for income like passive income in terms of dividend. They can be buying those for dividend purpose, and they are not trading, but they're investing for dividend income for now because we're already in it. But for trader, they want the price to adjust down. It become more attractive for them to jump in. And when you go up small again, you sell off and take your percentage and start going.
Okay, so you said something now about for those that just want to buy for passive income. Can you repeat that statement?
Yeah, for those that is income investor, call them dividend investor income. Those to earn income. That means that fund you're having is not a short-term fund. You want to do invest it and be earning that passive income, and you are working and you don't want to be trading like Rashid. But Rashid, you have to do tech analysis, I know, to buy low and sell. But you that are working, you are only passive income to save your money there because it becomes like a savings for you, but you are earning dividend on it. Yeah.
So those are the ones that actually go in to buy with, I mean, with those where the billionaires are.
Yeah, yeah,
those are, stay there. Yeah. That's what you were saying the other time. Okay.
Exactly. Yeah.
Okay. So Rashid, any other advice you would like to give to us?
Yeah, as I've always told people, there are two players in the market. Either you want to become an investor or you want to be a trader. You understand? A trader is one that buys low and sells high, and an investor is one that looks at quality companies and go long term. You understand? And again, a lot of people trade forex these days, so they virtually have an idea of, and we have a lot of people actually trading in Nigerian market now. Even on our trading platform, a lot of people that now trade, all they say is, I've paid the money, credit my account, and they trade on their own. And I see a lot of in and out, you know, they are doing. The only issue for our market now is our market is not a two-way market where you can short the market when the market is coming down. It's only one way, that when you buy low, you sell high. But in the US market, you can, when it's high, you can short that it's going to come down. So we only make money one way, not two ways like the foreign markets. It's okay. It's okay. It's interesting, but I know it's less risky than the forex market.
Exactly.
And it's less risky than a lot of even the US market, because the dividend payouts in Nigeria is very high, very, very high, very high. Like currently, all the companies that have announced now, most of them, they're more than 10% in what they're announcing.
Yeah, their dividend yield, you are correct. Yes, you are correct.
More than 10%. That's very high, very, very high. You know, so a lot of people should look into all these things. Like, there's actually, I mean, a club actually packaged a portfolio for them. They're looking at 4 years. They said they wanted a slush fund of about 10% every year, because they were keeping their money in the money market then. So, and I told them, then Zenith was about 17 naira. So instead of on the 25 million naira fund, so instead of getting 2.5, they're now getting 4 million on that thing per annum. And Zenith, worst case scenario, Zenith cannot go lower than what they are going to pay. Is that they keep paying higher dividends, as I've said, follow the smart money. Their lifestyle is expensive and it keeps going up. And for that fund, as long as it's for long term, they will be enjoying that yearly returns on investment. The only thing they might not enjoy is, let's tell them, prices fluctuate. So if I bought for you at 17 and the market is 10 naira, they know there is, because that was what they were scared of. And I told them that since it's for 4 years, at least you will enjoy those dividends for 4 years. And even if market is within that period, the next 4 years, if you calculate all in all, you are still
tax. Yeah. Thank you very much.
Don't go for the big names and go and rest.
Yes, so.
Don't go for the big names. And there's nothing to be scared about.
Thank you so much. Thank you. I really appreciate, thank you for this time. Thank you for taking our time to educate and enlighten us. And definitely, you have your contact on the slide already.
Yeah.
So we're reaching out to Rashid, actually, and then he will always direct us.
No problem at all.
We do seminars together every time.
No problem at all. Okay.
All right.
Yeah, thank you very much.
Thank you very much.
Yeah.
Thank you. Thank you
Bye.
for your time.
Yeah.
Yeah. All right. Bye.
Yeah,
Okay.
cheers.